Hello and welcome to the October edition of Pork Talk. 2020 threw us another challenge last month, with African swine fever being discovered in wild boar within Germany for the first time. This has presented significant challenges to the EU pork market, which will also have implications for us in Britain, as over half of our consumption is imported from Europe. So what's happened so far, and how might the situation develop going forward? ASF has only been found in wild boar close to the eastern border with Poland so far. This is not a particularly significant region for pork production in Germany. Restrictions on pig movement and pork trade within the EU are implemented on a regional basis, so it seems that the number of farms directly affected by restrictions within the EU may be low too. Of course, this depends on if and where other cases are found. Nonetheless, at present, it looks like pig supplies will remain similar. Despite this, the market situation has still changed significantly. A number of key export destinations outside the EU, most notably China, have placed a total ban on importing all German pork products. Last year, pork exports to these destinations amounted to 500,000 tonnes, worth €1.2 billion, rising to 1.6 billion if offal is included. There has been growth in exports to China this year, meaning volumes might have reached about 750,000 tonnes, or over €2 billion, for this year overall, if growth had continued at the same pace in the second half of the year. The inability to export to these markets effectively traps the pork that would have been exported on the EU market, where the regional approach means that trade is largely unaffected. Reduced demand for German pork has already knocked German farmgate prices in particular, which fell by about 13% the week ASF was found. Carcass balance is also a particular problem, with the Asian markets generally offering significantly better prices for offal and other cuts that are less desirable over here. Other EU markets have also reported some negative price pressure, such as Denmark and the Netherlands, as cheap German pork outcompetes them on the European market. The UK, which is a big importer of EU pig meat, may well also experience downward price pressure due to cheap German pork on offer. Our sow carcasses, which are generally exported to Germany, have reportedly already recorded a sharp decline in price. While this is generally a negative story for pig prices in Europe, some opportunity also arises for other exporters to capture share of the Chinese pork import market. Germany was the third largest supplier to China in the first 7 months of the year, with about 15% of the import market share. Spain, the other large European pork supplier to China, is particularly hoping to benefit. Freezing capacity may ultimately limit how much other EU exporters are able to pick up on the lost German trade though. Nonetheless, as Europe has been exporting so much pork to China lately, even if there was no compensatory increase in exports from other suppliers, the volume of pig meat retained on the EU market would not be particularly large in historic terms. This is because much of the pork is not extra pork that the EU market would have to absorb, but rather volume that the EU market had been consuming until recently. How easily this pork could be accommodated on the EU market again, especially considering the ongoing coronavirus pandemic, remains to be seen. Germany also remain optimistic that China will eventually support a regional approach to trade with nations affected by ASF, especially when the disease is only present in the wild boar herd. If China does change its position on this, disruption to global trade and market prices would be minimised. This situation is still unfolding. We at AHDB will continue to monitor developments as they unfold. To keep up to date, check out the market analysis section under pork markets and prices on the AHDB website, or subscribe to Pork Weekly for the latest updates in your inbox every week.